Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. I welcome all of you to today's session of Daily Stock, in which we are going to consider the quarterly earnings of the Alphabet Inc., which is the parent company of the Google. We will see how its fourth quarter earnings for the fiscal year 2023 are having an impact on the share price movement for the near future. After the earnings release, we have seen the stock price nosedive around 7 percentage point, and even in today's trading session, the stock is trading in the bearish manner. And I think it will take a while before it tries to change its trajectory because there is not much of an fundamental reason. But if you look at the performance of the alphabet stock for last couple of months, you can even say couple of quarters, it has been a stellar run and some breather is expected. So this decline, this correction can be seen as a more of an profit booking, and after things stabilize, maybe after a couple of weeks, we will see fresh buying momentum emerge. So all we have to do is bide our time if you are looking to only invest from the medium term to long term. But if you are a trader, then there is no such restriction. You can take the bait whether it is going up or down. You can keep looking for the promising opportunities, and in the near term the momentum has clearly shifted on the bearish side, but that is not really the case if you look at it from the medium term as well as from the long term perspective. So, first, we take a look on the fundamental side of the story. We will see how its last couple of quarters have been and what it entails for the coming quarter, the ongoing quarter. If we consider the highlights of the fourth quarter of 2023, the quarter was quite good, where the revenues grew by 13 percentage point year on year, and that's quite a robust earnings growth. Double-digit earning growth is quite solid by any definition, and along with that, the net income also grew at a solid pace, with it climbing from US dollar 13.6 billion to above US dollar 20 billion. So that's a remarkable growth, with EPS climbing almost 60 percentage point, 55 to 60 percentage point. So that also points to the operating margin getting better. At the same time, the revenues are growing, the operating margin is getting better, and the net income is on the higher side. So if you look at it from the fundamental point of view, there is not much of an wrong. From the results, there is good news only. But if you juxtapose this with the already solid run which the alphabet stock has seen in last couple of quarters, you will see that these things, these solid result has already been factored in, and given the price moves tend to be future oriented, this correction which we are seeing post the earnings release is more of an moderation of the expectation for the ongoing and coming quarters. And we will see that the pace of this revenue growth is likely to slow down, but growth is going to be there. The AI growth is still to kick in, but the segments like other growth and the cloud segment is also starting to grow and bringing in solid revenue, and the operating margin is also getting better. So the Google's other bets are paying off. Its bet on cloud segment is also seemingly paying off because it has turned from loss making to profitable, and things are likely to only get better. Of course, it will still have to go and try to increase its market share. But as things stand, there is optimism surrounding this side as well. Now let's take a look on the cash flow statement to see how the Google is utilizing the money it is generating. This is the balance sheet with its cash and cash equivalents of more than US dollar 24 billion. It is in a commendable position on the asset side as it has a lot of free cash sitting on the books which can be utilized for the purposes of R&D, acquisition, diversification, etc. This is the statement of income, and you can see that the revenue has grown from US dollar 76 billion to upward of US dollar 86 billion for the fourth quarter. And if you look at the annual revenue, it has also registered almost 10 percentage point growth with climb to US dollar 307 billion from 282 billion a year back. The net income is also up with this remarkable growth in the EPS. Whether you look at it from the quarter on quarter perspective or year on year, things are looking quite good. Now coming to the cash flow statement. For the quarter, you can see that the company has spent some cash on repurchase of stock and dividend payment. As a result of that, it has actually impacted the cash and cash equivalent position negatively, with it declining from upward of US dollar 30 billion to now at 24 billion. And this is in a way is just paying back the investors. So the company is utilizing the cash it is generating from the business, from the operations, to pay back the investors. So it is in a way enriching the investors only, as it had generated almost US dollar 19 billion from the operations, of which it spent 6 billion in investing, and in the financing segment 19 billion have been spent. If we divide the revenues in different segments, the Google services is the main moneymaker for the alphabet, with it bringing in 76 billions. After that, the second place is occupied by the Google Cloud, and then the smaller verticals of other bets, and there is the hedging gain as well. Now that we have considered the fundamental side of the story, we turn our attention to the technical outlook. And this is the thing I talked about in my initial remark, where we saw that after the earnings release, the stock has nosedived from around 152 to now trading close to 140. This is a significant drop, and if we consider the Microsoft's earnings, which also saw similar reaction, but the magnitude was lower. Yesterday's session was dedicated to the Microsoft's earning. There also we saw that the company is doing well. There is growth on the revenue side as well as on the net income side, but still the stock was trading lower, and similar inference can be drawn for the Google as well. The growth is there, revenue as well as net income. The operating margin is also getting better. So there is not much wrong on that side. Only thing is that there was too much optimism in the market, and the revenues which are likely to be generated by the improvements brought on by the AI are still some distance away. And as a result of that, some earlier enthusiasm is now waning, and investors are realizing that the gains are likely to take much longer to realize than what was the earlier expected timeline, and I think that is driving this decline in the stock. But as I have said earlier, also the momentum is bearish on the short term, but things are still quite good and conducive for the continuation of these stellar run in the medium to long run. Now, what are the key levels you need to watch out for? I think this prior consolidation low needs to be kept in mind, and if in next couple of days, if the stock price dips toward 136 or below and it holds in these price line around 140 to 135 price band for next couple of days. In that consolidation phase, I think we can indeed go for the execution of a short sell anywhere in the vicinity of 140, 142, with the further expectation of decline toward 135 and below towards 130. So that is the immediate expectation looking at the magnitude of decline which we have already seen in the Google. I think we will have to wait for next couple of days and see how things evolve. If there is no swift reversal and rise from the current levels, then that will naturally open up the possibility of eventual decline towards 130. So we have to see how things shape up for the Google over next week, and then depending on the price momentum, I think we can go for a good risk reward ratio trade in probably the second half of next week. Now, if we change the timeline to medium term using the daily charting, here you will see that the formation still remains of higher highs and higher lows, and that is why I have said that the momentum is still favorable for the continuation of the bull run in alphabet stock. So all we have to do is watch out for the key price levels as long as it is not really dipping much below 130 135 price range. We can have faith in the possibility of it recovering in coming weeks. Maybe it will take some time, and it might start to recover only in the second quarter of this fiscal year. But for that, the key level to watch out for is going to be immediate swing low, the consolidation low close to 130 price range, and that is going to be a critical marker for the Google's trajectory in the coming weeks. So if you are a medium term trader and investor, swing trader and investor, then the bullish trade will have to wait for at least I think a month or two, and depending on how things shape up over next couple of weeks, you can take fresh assessment and then decide to go for a newer trade or simply sit on the sideline. From the longer term perspective, if your time horizon is of next half year or year, then I think in that scenario also you will have to go with the flow, and the momentum has been bullish with this continuous gain since it touched the price level of around 90. In this scenario, I feel that there is possibility of Google remaining in a bearish zone for next couple of weeks. But if it finds its footing close to 130 price range and consolidates and starts to show the signs of revival from those levels, I think we can indeed invest for the long term in the Google stock with the expectation of it eventually crossing above this immediate swing high, the all-time high established just a week back, and going beyond towards 160 or thereabout, and maybe even beyond that. So from the long-term perspective, the momentum still remains bullish. Only thing is that we will have to wait for our moment in the sun. We will have to wait for a good risk reward ratio, and then we can take our bait and try to ride the rally on the higher side. So that's all from my side for today's session, where we considered the earnings report on the Google. And as I said, the stellar run is more likely than not to continue. It is in a bull run, and I am expecting this to continue for a while, but only after a break in the short run. So that is why I'm saying that in the short term, the things are looking bearish. If you are a trader and looking to gain some points with the possibility of it further declining, you can go for that as well. But if you're a long-term investor, then you will have to wait for things to stabilize, and then eventually you will get a opportunity as well. Now it's time for me to sign off. If you have any query or any idea to share, do write to me in the feedback, and I will be more than happy to take the discussion forward. If you have found this information useful and tradeworthy, do write to me in the feedback. Do subscribe to the channel, and let me know how you found this session helpful and interactive. Thank you all for joining in. Have a fabulous day ahead. See you next time around. Till then, goodbye.